Hey everyone, how's it going? It's Joshua Farris here. We're going to be discussing the 2022 multifamily housing outlook. So if you haven't already, make sure to like and subscribe. We're going to be discussing the rent growth. We're going to be discussing the inventory. We're going to be discussing some of the challenges that investors have been seeing and some ways that we can be overcoming those. And we'll be taking a look at what some of the trends are leading us to believe might be in store for us for the rest of the year and moving on into 2023 so that you can be better prepared to make a decision for your assets, your multifamily assets, on whether or not you should be acquiring more, exchanging, where you can be exchanging into, some different areas that might be a good spot to be looking for. And if you're a first-time real estate investor, to be better prepared to make a successful acquisition. So stay tuned. Like I said, like and subscribe if you haven't already. Let's get into it. This is your real estate multifamily housing outlook update for 2022 and beyond. So what's been on the mind for every broker or investor? Well, it's really been inventory. We've got low inventory. We've seen low inventory for the last couple years, and that's due to a few different factors. But let's go ahead and pull this Forbes article up, which I think really succinctly describes 2021 and what has been experienced in the multifamily space. Following 2020, a year that was marked by great uncertainty with the start of a pandemic in the United States, many people were nervous about how the real estate market would fare in 2021. Turns out that multifamily real estate 2021 was a year of higher prices, compressed capitalization rates, cap rates, low vacancy, and high rent growth. Some assets, primarily Class C, which were typically in poorer condition and not as well located, had higher delinquencies. But overall, there were some all-time high prices and compressed yields. And I think that pretty well sums it up. What I've been experiencing with investors, primarily sellers who are looking to exchange, is the difficulty with finding replacement properties that are going to meet or exceed their capitalization rates. And as we're seeing with new buyers that are looking to invest, they're going, hey, some of these cap rates are not quite what I'd be expecting and what I was looking for. And so they're looking in different areas and different asset classes like industrial or even mobile home parks. So we've seen some of those decreased cap rates, and we've also seen the difficulty in finding something to exchange into when you're looking to sell a property. So that has really limited a lot of that inventory, and it's also made it such that if there is an asset that's brought to the market, and if it's priced reasonably, it's going to be sold very quickly. The only problem that we've seen with those investors is where do they put that 1031 exchange money if they're going to exchange it and avoid those capital gains taxes. So I think that article pretty well sums it up, and it's been what I've been experiencing working with investors over the last couple years. So with the continued demand and the reduction of supply, we have seen the rents increase. If you know anybody who is a renter, or if you are a renter and you've been looking to rent in the last couple years, you've seen that. Let's go ahead and pull up this article here, First Tuesday. As of November 2021, year-over-year rents for one-bedroom homes in California grew 21% in San Diego, 16% in Bakersfield, 13% in Fresno, 11% in San Jose, 10% in Los Angeles, 8% in Sacramento. In comparison, the year-over-year rents for two-bedroom units were increased 22% in Fresno, 15% in Bakersfield, 15% in San Diego, 9% in Los Angeles, 6% in San Francisco, 6% in San Jose. Inland metros like Bakersfield and Fresno experienced the steepest rent increases, whereas coastal cities where rent was already exceedingly high experienced slower growth. These rent changes across California reflect wide-scale national trends, which have seen faster rent increases in what are considered more affordable locations. Now, I've seen that as well. Here in the Central Coast, we have seen some pretty large rent increases. We've seen a very high demand. In fact, I talked to a renter neighbor who had to move due to some renovations needed on their rental, and they said that there were about 50 people who had lined up and put in applications for a two-bedroom, one-bath rental. They ended up getting the rental, but they gave me some great feedback as to the demand. And that's what we've seen. All the other investors that I've been working with have described the same thing. When they put a unit on the market for rent, they're getting a lot of applicants, and oftentimes they're able to increase those rents quite a bit. So that's consistent with what I have seen here on the Central Coast and in California at large. So 2020 and 2021 were characterized by low interest rates and by cheap money. So if you were out there looking to acquire property, you knew that it was very cheap to find money, but it was pretty expensive to buy the assets, and there was a lot of competition. Now that we've seen the interest rates increasing, a lot of investors are wondering what that might be doing to affect multifamily housing. We can pull up this article here. JP Morgan, in June 2022, the Fed increased interest rates by 75 basis points, its largest move since 1994. The target federal funds rate is now 1.5% to 1.75%, and the Fed anticipates more increases. So with a higher interest rate, we are seeing some entry-level, first-time investors having some difficulty buying those 1 to 4 units because they're not bringing in a lot of cash from a 1031 exchange. For the 1031 exchange folks, we're having difficulty finding inventory for them. But with the increase of interest rates, I'm expecting that is going to open up a little bit more inventory, make it a little bit easier for those folks who are doing a 1031 exchange. And it actually might be a better situation for people looking to buy that 1 to 4 unit range. Why? Because I think that there are going to be continued increases with the interest rates, but I do think that down the road, when they do decrease, we're going to see some even more interest in buying multifamilies, especially with some of the volatility in the stock market, and we're seeing some volatility in other asset classes. So I think multifamily is always going to be something that is going to hold a strong interest for investors, and it's a smart move as inventory comes on the market. If it makes sense for you to go ahead and add it to your portfolio. Let's go ahead and get into some other elements and some other trends that we're seeing here, and let's take a look at some areas which are hot markets and you can be paying attention to as an investor. All right, so let's go ahead and move on over to Loopnet's top areas for multifamily investment opportunities. And for the top 3, we've got them here in California. Let's go ahead and pull up the list. Fresno, California at number 1, Stockton at number 2, the Inland Empire number 3, Tucson, Arizona 4, number 5, Las Vegas, number 6, Albuquerque, New Mexico. They're basing their analysis primarily on the key factors for multifamily investment: liquidity, rent growth, and demand. Now, I think that's great for investors here on the Central Coast to understand. Fresno and the Inland Empire and Bakersfield are really not that far away from us, and I think present a really great opportunity if you're looking for higher cap rates and also those value add type properties. You're also going to get a larger mix of units here on the Central Coast. 10 to 15 units is going to be a very large asset, and those really come pretty rarely. However, over in Fresno, Stockton, and the Inland Empire, and especially in the Arizona markets, you're going to have some opportunities for increased diversity in the multifamily asset that you're looking for, and so that's really attractive for a lot of investors. So let's move on over to the San Luis Obispo counties and the Santa Barbara counties, the primary area that we're looking here for the Central Coast. So we've seen 38 sales of multifamily residential income properties over the last 6 months. 6 months to a year ago, we have seen 69 sales for the San Luis Obispo County and Santa Barbara County area. So we have seen decreased sales in the last 6 months as compared to the previous 6 months. All right, for the San Luis Obispo and the Santa Barbara County, there are currently 27 multifamily investment income assets available for sale currently on the market. There are definitely some great opportunities out there, so let's go ahead and take a look at them, and we'll see some different options out there for you as investors. All right, so one of the more interesting ones, if you're out there looking, is the establishment there in San Luis Obispo. 1703 Santa Barbara Avenue, listed at 1995, and it has a total of 19 units, 4,300 square feet, 6,000 square foot lot, and it originally built in 1885. The rent being shown is $166,000. Now this is a great opportunity for somebody who is looking to restore and renovate a very iconic building here in San Luis Obispo and to potentially use it as a short-term rental. You have to double check with the county on the availability on that and what you can do, but I think it's a really interesting asset worth taking a look at, but it's going to require a lot of work. But it's really an interesting one, and it's an iconic property, which I think is worth a look. If you're looking for a bread and butter fourplex, we've got a couple available ones, one in Grover Beach and one in Santa Maria. 265 North 16th Street in Grover Beach. There's a 4-unit apartment building available for sale, 1.275. And on 229 Sheila Lane in Santa Maria, there's a fourplex available for 1.150. And if you're looking for the least expensive multifamily, we've got one in Cayuma on Washington Street, 4 units, and it's listed at $300,000. So I wanted to bring that to your attention, give you some variety on what's out there. So some of the challenges that investors have been having is where do they exchange into if they're selling an asset here on the Central Coast? Well, I've been encouraging my investors to be considering out of the area options. Now, I just recently had a discussion with a owner. He has a triplex in Grover Beach, and he's considering possibly selling. But because the inventory is so low, he's having some difficulty with that. So we're helping him find something off market. Now, what I've been encouraging other investors to do is to be, like I said, looking out of the area. Fresno, I think, is a great opportunity. Stockton, if you know the area, then that has some potential there. And some other areas, maybe Tulare or Visalia. Also, I've been suggesting taking a look at Arizona. I think there's some great opportunity there. Tucson and the Phoenix area has a great asset mix, as we can see here. There's some great opportunities, and I think it's worth considering if you're looking to sell an asset here on the Central Coast. Maybe you haven't increased rents in the last few years, and you're looking for a great return on your investment. I know Arizona has a lot of those, and a lot of great opportunities. I've got a relationship with a broker over there in Arizona, so if you would like me to connect you with them, feel free to reach out. I've got my information there in the description box below. So that's the multifamily housing update for us. I think that we're going to continue to see strong demand for multifamily housing. I do think that we're going to see some more inventory with the increased interest rates. I do think that we're going to see some higher demand with some volatility in the stock market in the upcoming months. Everybody needs a roof over their heads, so multifamily is not going anywhere anytime soon. But I am suggesting and advising the people to be considering outside of their typical area. So what do you think? Go ahead and leave your comments in the description below. If you have any questions or need help with multifamily investing, feel free to reach out. Here to answer any questions or provide any guidance on that. Hope you all have a great day. Like I said, please like and subscribe, and we'll see you on the next one. Bye now.